Well, the problem is Bitcoin, unlike gold, has two qualities. One is the store of value quality, and the other is the growth quality. You know, what can the network be used for, the new technology, and those things are always interplaying. So this is why you see this kind of schizophrenic nature of Bitcoin and crypto overall. Is it shifts narrative, so it's not correlated all the time. So we have passing correlations as opposed to total correlations. So over a longer time period, I wrote a tweet about this, over a longer time period, there is very little correlation over anything. Over short-term correlations, over short-term time periods, you've got correlations with all sorts of things. A long time looking at what is the predominant driver of price of crypto, and I came up with the fact that it's the amount of volume kind of multiplied by the number of wallets. And that is a good fit for pretty much everything, number of active wallets. So we need, for the price to increase, we either need daily volumes to increase or the number of active addresses to increase. Right now, we've got neither. So we got to think, okay, how will we drive that? We either do it from further retail participation, but in an inflationary environment where real wages are negative, it's difficult. So therefore, it would have to be institutional. Now, as I've said to you on the show before, I spent all day speaking to institutions, and pretty much everybody is, you know, they went last year to get approvals. They've now started getting approvals. They're now trying to figure out how the hell to do it. And so don't forget, 32 billion last year went into VC because they couldn't put it on their balance sheets, and it's easy to do VC. So that tells you there's pent-up demand from institutions, but the reality is they just don't want to own Bitcoin on their balance sheet. You know, one of the things I've done on the side is built a fund of funds business that invests in crypto hedge funds, because you need institutional product right now. There's no institutional product. They're not going to use the ETFs because they're all futures based.
Aren't they buying the Grayscale product, which now has a 30% discount to net asset value, 27%?
Yeah, and some people will, but if you're an institution, it's very difficult to describe to your investment committee why you own something that says Bitcoin on it and it's diverged in price. You know, these kind of futures-based products tend to be retail only. You know, all these triple levered, all of these other things that we see in commodity markets as well, they're the same.
Well, you're hearing this. I think you're in a healthy mix of macro and VC. How would you position yourself now?
Well, one of the things that I think people haven't talked about is this rise in prices is a massive tightening of monetary conditions. From my expectation, I think we've already hit 200 basis points, and that's why the yield curve is essentially zero. So the ability of the Federal Reserve to raise rates without a recession is pretty close to zero. So therefore, if a recession or something close to it is already being priced in by the yield curve, then demand should come down anyway. So I'm actually less of an inflationist over time. I think more of the inflation argument, or more of the inflation was driven by the supply as the world came back online again and there was restricted supply. So I don't think the Federal Reserve could have done a lot differently. I think you would have taken some of the inflation out for sure. So for me, it's looking at the macro environment. The macro environment is not easy to trade either. You kind of, you know, being short in this environment in equities, how much further downside? Well, you know, if you go back to every tightening phase from the Federal Reserve, the market tends to sell off about between 15 and 28%. And we've kind of in that zone. So should it go any further? If we're in a full recession, then it's different. But we also have the reaction function from central banks when we get into recession, is they're going to use the balance sheet. Now, we might see direct transfer payments, i.e., you know, tax rebates or whatever version to offset the energy costs and the inflation costs. Well, that's actually a net printing of money. And I think that's a positive for the market that's likely to come. So the macro markets are actually quite difficult to trade right now. You know, the dollar feels like it's going higher, but I think it's not going to be in a straight line. Bond yields, I think, will probably top out somewhere between here and 225 in the 10-year bonds. But we're kind of still a bit in no man's land. We sold off, didn't really stick in terms of yields. You know, it's not an easy place, but I'm trying to sit patiently. I'm long a bit of bonds, long a bit of gold, and long crypto, and long some dollars, and just kind of waiting to see. I don't think it's the time to take aggressive bets yet.